Bitcoin has seen better days. The leading cryptocurrency recently dipped below $58,000, a significant drop from its all-time high. This volatility isn't new for Bitcoin, but it always gets people talking. Remember, Bitcoin is a decentralized digital currency. It operates independently of central banks and governments. This freedom makes it susceptible to wild price swings, driven by speculation news and market sentiment. Despite the recent dip, Bitcoin has shown resilience. It has slightly recovered and is currently hovering above the $58,000 mark. The question is, will it continue this upward trajectory, or are we in for another downturn? Bitcoin's performance often sets the tone for the entire cryptocurrency market. When Bitcoin sneezes, altcoins, alternative cryptocurrencies, catch a cold. This correlation is evident in the current market downturn. Many altcoins have experienced even steeper declines than Bitcoin. This synchronized movement highlights the interconnected nature of the crypto market and its reliance on Bitcoin's price movements. However, it's not all doom and gloom. This volatility, while nerve-wracking, presents opportunities for savvy investors. Those who understand the cyclical nature of the crypto market can capitalize on price swings. The crypto market isn't the only one feeling the heat. Global stock markets have also experienced significant losses recently. This downturn is fueled by various factors, including rising inflation, geopolitical tensions, and potential interest rate hikes. Interestingly, the crypto market, often touted as an uncorrelated asset class, has mirrored the stock market's decline. This correlation suggests that crypto might not be the safe haven some investors believed it to be, at least in the short term. However, it's crucial to remember that correlation doesn't equal causation. The long-term relationship between crypto and traditional markets remains to be seen. The current economic climate has sparked fears of a potential recession. With markets fluctuating and uncertainty looming, many are concerned about the future. Recessions are a natural part of the economic cycle, but they can be unsettling nonetheless. They bring about challenges, but also opportunities for those who are prepared. History teaches us that recessions are often followed by periods of recovery and growth. The market's resilience is a testament to its ability to bounce back stronger than before. The dot-com bubble burst in the early 2000s is a prime example. It was a time of great turmoil, but also a period of significant learning and adaptation. While initially devastating, it paved the way for the rise of tech giants like Amazon and Google. These companies not only survived, but thrived, reshaping the digital landscape. Similarly, the 2008 financial crisis led to the birth of Bitcoin itself. This new form of digital currency emerged as a response to the financial instability, offering an alternative to traditional banking. The key takeaway: don't panic. Staying calm and composed during turbulent times is crucial. Instead, view downturns as opportunities to reassess your investment strategy, identify undervalued assets, and position yourself for the next bull run. By staying informed and proactive, you can turn challenges into opportunities for growth and success. Section 5. Institutional Interest. BlackRock, Morgan Stanley, and the Future of Crypto. Despite market volatility, institutional interest in crypto remains strong. Major players like BlackRock and Morgan Stanley have dipped their toes into the crypto waters, offering Bitcoin-related services to their clients. This institutional adoption is a significant development for the crypto market. It signals growing acceptance and legitimacy for digital assets. These institutions bring with them massive capital and expertise, potentially fueling the next wave of crypto adoption. Their involvement also suggests that these financial giants see long-term value in crypto despite short-term fluctuations. This perspective should provide some comfort to long-term investors. Section 6. Government and Bitcoin. Potential policy shifts on the horizon. Governments worldwide are grappling with how to regulate cryptocurrencies, a task that is proving to be both complex and contentious. The United States is no exception, as it navigates the intricate landscape of digital currencies. While the Biden administration has signaled the desire to regulate crypto, the specifics remain unclear, leaving many in the industry uncertain about the future. Some speculate that the US might follow China's lead and crack down on crypto, implementing stringent regulations to control the market. Others believe the government will embrace a more balanced approach, fostering innovation while mitigating risks, thus creating a more sustainable environment for growth. The outcome of these regulatory discussions will significantly impact the future of crypto, determining whether it will thrive or struggle under new laws. Clear, well-defined regulations could boost investor confidence and accelerate mainstream adoption, making cryptocurrencies a more integral part of the financial system. Conversely, overly restrictive measures could stifle innovation and push crypto activity underground, leading to a less transparent and more volatile market. Section 7. Opportunities amidst uncertainty, a time for strategic investment. The current market downturn might seem daunting, but it also presents opportunities for strategic investors. As Warren Buffett famously said, "Be fearful when others are greedy, and greedy when others are fearful." When markets are down, asset prices tend to be lower, offering a chance to accumulate at a discount. This strategy, known as buying the dip, can be particularly rewarding in volatile markets like crypto. However, it's crucial to conduct thorough research, assess your risk tolerance, and invest only what you can afford to lose. Remember, timing the market perfectly is nearly impossible. Section 8. The long game. Patience and perspective in the crypto market. Navigating the crypto market requires patience and perspective. Short-term price fluctuations are inevitable. Don't let them distract you from your long-term investment goals. Remember why you invested in crypto in the first place. Was it the technology, the potential to disrupt traditional finance, the desire for a decentralized financial system? Keep these reasons in mind when the market gets bumpy. Zoom out. Focus on the long-term potential of this asset class. And remember that patience is a virtue, especially in the crypto world. Section 9. To sell or not to sell. Weighing your options in a volatile market. The decision to sell or hold your crypto is a personal one, influenced by various factors. There is no right or wrong answer, as each investor's situation is unique. It depends on your individual circumstances, risk tolerance, and investment goals. Consulting with a financial advisor can provide valuable insights. If you're feeling anxious about the market downturn, it might be tempting to sell and cut your losses. This is a common reaction during volatile times. However, remember that selling at a loss crystallizes your losses, making them permanent. Before making any rash decisions, take a step back, reassess your investment strategy, and consider your long-term goals. Patience can often be a virtue in investing. If you believe in the fundamental value of your crypto assets, riding out the storm might be the most prudent course of action. Staying informed and keeping a level head can help you navigate through market turbulence.